My name is Raj Kandola. I'm the Head of Policy at the Greater Birmingham Chambers of Commerce, and I'd like to welcome you all to today's event. Next slide, please, Grace. So very quickly then, just to run through the format of today's session, I'll do a very quick introduction, just covering off some of the work that the Chamber is undertaking in partnership with the likes of the Combined Authority and the other two chambers across the West Midlands Combined Authority patch around Brexit. We'll then hand over to Peter Williams, who's the Indirect Tax Partner at RSM, for his presentation, which will outline the changes being introduced by the European Union and what businesses need to do to prepare in the UK. Then we'll look to open it up to a Q&A from the audience before the end. So if you do have any questions, please do put those in the chat box. Similarly, if you have any tech issues, please obviously put a note in the chat box as well. And my colleague Grace will be happy to pick those up. Next slide, please, Grace. So very quickly then, for those of you not familiar with the Chamber of Commerce, the Greater Birmingham Chambers of Commerce has been around since 1813. We've got just under 3,000 members, which makes us one of the largest chambers in the country. And our essence very much is focusing on helping local businesses connect, support, and grow. And one of the ways in which we do that is by helping inform local businesses of political or economic developments which might impact their output moving forward. So we're doing a lot of work related to Brexit, as you can imagine, lots of activity coming up over the next few months to help support businesses as they adapt to the new trading arrangements with the European Union. We've teamed up with Coventry and Warwickshire Chamber of Commerce, Black Country Chamber of Commerce, and also the West Midlands Combined Authority on a range of related post-Brexit transition related support for businesses across the West Midlands area. So again, as you can see, this focuses on digital workshops, which looks at country-specific events. So focusing on major markets in the EU, such as Germany and France, and what local firms need to know when trading with them post-Brexit. As you can see as well, we're also offering a range of trading courses. So for any business involved in the import-export of goods, it's well worth looking into these as they're fully funded training courses. So offering free places that are normally worth £220 per delegate. We're also offering a custom support helpline for businesses where you can speak to our international trade advisors and our export documentation team about any questions you might have about moving goods between the UK and the EU and the new rules. And finally, of course, just for those who are not aware, the UK government is providing grants of up to £2,000 to help SME businesses that are new to importing and exporting with training or professional advice through their SME Brexit Support Fund. Now, applications are due to close on the 30th of June or earlier if the funding is allocated before the end of this date. So a bit of background intel there. What I'm now going to do is hand over to Peter.
Good morning, everybody. Hopefully you can all hear me and see my slides. Yep, get the thumbs up. Thank you for that, Raj. So without further ado, what we're going to talk about this morning is we're going to briefly cover, well, the session is primarily focused on e-commerce. And when we talk about e-commerce, for the purposes of this session, we're going to be talking about goods rather than services. So selling goods over the internet. So your typical online retailer selling goods to customers in the EU. My name is Peter Williams. I'm a VAT partner or indirect tax partner at RSM in Birmingham, although I live in Nottingham, which is where I'm sat this morning. I've not been going into our offices very much recently, I'm sure like you. The agenda this morning is as follows. So how are GB online retailers currently selling into the EU? We're then going to talk about more change that's on its way from the beginning of July, the 2021 EU e-commerce VAT package. Part of that VAT package is known as the import one-stop shop for low-value consignments of goods. We're going to be looking at that a bit more closely. I think originally this session I was meant to be holding it co-jointly with somebody from Amazon, which didn't happen for whatever reason. So we will cover briefly selling via online marketplaces like Amazon. I don't deal a lot with businesses that sell via Amazon typically. I deal lots of online retailer clients, but not many that sell specifically via Amazon. But we'll cover those issues at a high level, and then we'll talk about how businesses should be preparing for all of these changes. So how are GB online retailers selling into the EU now? So this slide was prepared for a prior presentation back in January, when the headlines in the newspapers were, pretty dominant that, particularly for online retail, Brexit was a bit of a wake-up call, and there were lots of reasons for that. I think a lot of businesses weren't ready. I think that the express parcel carriers weren't ready, and I think everyone was kind of taken aback and a bit surprised about how different the post-Brexit trading world with the EU was going to look and was actually happening in practice. Leaving the customs union, the EU customs union, leaving the EU single market has had a profound impact on a lot of businesses. It's had a profound impact on online retail. So it's worth just, I think, quickly covering what changed on the 1st of January. So what changed was that Great Britain now became a third country outside the EU, so basically became the same as the US or Canada or India or China, sitting outside the EU, which meant we were no longer within the EU's distance selling regime. So prior to Brexit, a lot of online retailers would have VAT registrations across the EU for distance sales. So we, and a lot of businesses that weren't VAT registered in the EU relied on the EU distance selling thresholds to not be registered in individual EU member states and just charge UK VAT, which they could do. A lot of small businesses could do up to typically turnover of €35,000. What's changed is that obviously the distance selling regime disappeared, and EU import VAT, which wasn't there before on goods being sent to the EU from GB, is now due on all goods entering the EU if the consignment value, the intrinsic value of the consignment, is greater than €22. So if it's under €22, no import VAT. Over if the consignment package, the parcel's over €22, there is import VAT, and somebody's got to pay that, whether it be the seller or the customer. And import VAT is calculated on the taxable amount, which is the customs value of the goods, plus any duty that's paid, and the cost of transportation to the final destination. And import VAT is paid in the EU country the goods are cleared for import, so not necessarily the EU country where the customer is located. So a lot of the fast parcel carriers will clear goods at certain hubs around the EU, and if they don't transit those goods to the customer's country, the import VAT will be calculated where the goods are cleared for import. So the other big change from 1st of January was customs duty, which is now potentially due on individual consignments sent to the EU where their value exceeds €150. So the percentage duty rate will depend on the HS code, but it has resulted in some circumstances. So, for instance, in the fashion industry, duty rates as high as 12% on many items of clothing being sent from GB to customers in the EU. And I think more than the VAT, in many instances, the customs duty hit has come as a real shock to a lot of online retailers that have their operations based in GB. And one of the big issues, an issue which I don't think anyone had really given a lot of thought to, unless they're a customs duty geek, prior to the 1st of January, was around rules of origin. So in order for goods moving between the UK and the EU to obtain tariff-free access, so this tariff-free agreement that Boris Johnson waved in the air and said, there wouldn't be any tariffs on goods moving between the UK and the EU, there was a catch, and that catch was that basically those goods needed to have originated in either the UK or the EU to obtain tariff-free access. So they must demonstrate that they have originating status within the UK or EU. And if they don't, then they're potentially subject to customs duty if they're over that €150 limit. And when we talk about rules of origin, we talk about what we mean is the economic nationality of the goods being imported. So not where they've been shipped from, but where they were produced, where they've been manufactured. So, you know, I think British online retailers have, you know, led the world and certainly led the EU in, you know, buying or having product manufactured in China, the Far East, having it imported into the UK, where it might be, you know, branded or, you know, some sort of process applied to it, and then selling it to EU customers. You know, we've led the world in that. And what leaving the EU, what leaving the customs union has meant is that importers that you know, we use the UK as a distribution hub. So, you know, import goods into Great Britain, and then, you know, send individual parcels to customers in the EU via a website. There's potentially a double duty hit: customs duty when the goods come into the UK from, say, Vietnam, Thailand, or China, and then customs duty again when the goods cross the EU-UK border, which is, you know, for a lot of businesses that were caught unawares of that, has been quite costly. And a quirk of the EU Commission guidance deems that qualifying goods sourced and imported by UK retailers from the EU that are then sold back to EU customers don't qualify under rules of origin, and they're subject to duty going back into the EU. So just a quick word on Northern Ireland. Northern Ireland, certainly for goods, for customs union purposes, is still part of the EU. So low value consignment relief that we talked about earlier of €22 is still available for goods imported from outside Northern Ireland, outside GB, and into Northern Ireland from the EU. It's still within the EU's distance selling regime, Northern Ireland. And rather bizarrely, though, you still have to charge UK VAT on B2C sales by a GB seller to a Northern Ireland customer. There shouldn't be customs declarations for goods going into Northern Ireland valued at under £135, and there are still simplified customs declarations in place, light touch customs declarations for most goods under €135 in value. But there are tariffs payable on goods at risk of entering the EU single market, so crossing the border from Northern Ireland into Southern Ireland. This has caused, you know, a lot of businesses much difficulty, and so the UK unilaterally has decided to extend lighter touch customs checks until the 1st of October 2021. And we did that without EU approval, but as it be, those lighter touch checks are still in place now until the 1st of October 2021. So all these challenges, how are GB online retailers getting their goods to customers in the EU now, when, you know, stock's in the UK and we're selling goods online to you know, B2C to private customers in the EU? You know, we have to deal with lots of commercial challenges, customs declarations, clearing charges, the additional cost of the compliance, paperwork and friction. Bulk clearance for parcels is typically only available for items under €150. Customer delivery satisfaction is a big issue. You don't ideally want your EU customer getting a knock on the door from the express parcel company being asked to pay a VAT or a duty bill, because they're unlikely to go back to your website again if that happens. So there's that issue. You know, you don't want customer goodwill to suffer. You want a seamless service really for your customers, so that what they pay on the website is all they pay, ideally. And then talking to retailers, probably the biggest issue, or a real headache that online retailers are having at the moment is to do with customer returns, whereby, you know, a customer in Germany might order from a UK website 3 dresses in 3 different sizes and return 2 of them. Customer returns is a huge issue, and we'll come on to why that is in just a moment. So I think a lot of businesses in preparation for Brexit decided we'll have a local VAT registration. They might have already had a VAT registration in a member state as a result of the distance selling regime, and they may have decided to stay VAT registered after the 1st of January, so as to ensure that they wouldn't suffer a VAT cost, and ensure that, you know, the customer experience wasn't interfered with as much as possible. So, you know, you'd have goods in Great Britain being sent to a local EU VAT registration. So import VAT would be incurred, say, in Germany, where the business had a German VAT registration. You'd reclaim the import VAT on the German VAT registration, and then you'd account for German VAT on the sale to the end customer in the EU. So, you know, VAT-wise, pretty much the same as prior to Brexit. I think the problem with this, that a lot of retailers, a lot of very, very large, well-known retailers realised on the 1st of January, was that because of the imposition of import VAT and duty into the supply chain, and particularly the import VAT, a lot of express parcel carriers couldn't actually put this model into practice. And the reason typically was that they tended to name the consignee or the end customer in the EU as the consignee and not a local VAT registration. So they were typically paying the VAT on behalf of, or paying the VAT on behalf of the seller. The seller was suffering the VAT, but wasn't in a position to reclaim it on its VAT registration because the local VAT registration wasn't being named as the importer, the consignee was. So it all kind of fell down very quickly. Not exclusively, but a lot of retailers at the parcel express parcel carriers couldn't operate this model. So very quickly, I think a lot of online retailers in GB adapted to this, and what a lot are doing currently, which seems to be the preferred model, is they are selling goods online, delivered duty paid to the EU end customer. The end customer is named as the importer, the consignee is named as the importer, but the seller, the online retailer, is paying the import VAT and paying the duty on the customer's behalf. So the customer gets its parcel with the VAT already paid by the online retailer. No further charges for the end EU customer to pay. And if there's any customs duty, the GB retailer is basically suffering that cost. And by naming the consignee as the import, that changes the place of supply and removes the obligation for the GB seller to have a local EU VAT registration. And as you know, as just said, the consignee is named the importer, not the seller. VAT and duties paid by the parcel carrier upon import into the EU, recharged back to the online. And that has become the default model for a lot of online retailers. The goods are in free circulation with the EU, delivered to the customer without any further charges, and the seller is just paying a landed cost price on the website at the online checkout without any further charges. The problem comes, as mentioned, if the customer decides to return the goods, because the seller's borne the cost of any import VAT and duties that have already been paid. So if the seller returns the goods to Great Britain, decides they don't want them, or order 3 of the same size, return 2 to GB, the online seller's already paid that duty, and that's a sticking cost. While the import VAT might be able to deal with that and recover it when the goods come back into the UK, the customs duty is a sticking cost. And so if you've already paid it on the customer's behalf, you're not in a position to typically unwind that cost and may need to pay it again when goods are returned to the UK. So that is impacting margins quite significantly if the goods, are over that €150 limit. There is something called return goods relief, which in principle can mitigate that customs duty cost. But it's an extremely complicated customs relief, and it requires the customs paperwork on the original export of the goods into the EU to be married up with the paperwork for when the goods come back. And if you're a retailer dealing with hundreds, perhaps thousands of parcels going into the EU each week or each month, then that is and particularly if you're using another company to deal with returns and consolidate those returns, then actually that practically commercially that is a really big task to be able to do that. And there's not many retailers that I've spoken to that have found a solution to this, that are able to actually claim returned goods relief very easily. So at the moment it's kind of a question of which is having to suck up the customs duty, and it's just a cost of doing business now. It's a cost of sending parcels into the EU, and there's an additional cost if the customer returns the goods. So a lot of businesses have looked at actually holding stock in the EU. Lots and lots of advantages to that. Avoid double duty cost if you haven't got a customs warehouse in the UK. That's one benefit. You can import directly from the Far East into the EU, just pay customs duty once. Once the goods are in free circulation within the EU, then they can move around the EU without import VAT, without any further duty. And if you've got an establishment in the EU and a registration within the EU, you can rely upon the EU's distance selling regime, which obviously doesn't apply to Great Britain now. Although that will be then getting a major overhaul from the 1st of July. So the EU 2021 e-commerce VAT package, you're going to hear a lot about this in the next few months. The one-stop shop, the mini one-stop shop, the import one-stop shop. Effectively, what the EU is doing is extending the mini one-stop shop, which is put in place in January 2015. That was just for suppliers of digital services, telecommunications, electronically supplied services. They are enlarging that one-stop shop to cover a wider range of supplies. And the enlarged one-stop shop will actually cover 3 new special schemes. The non-union scheme, which will be services only eligible to entities businesses outside of the EU. We're not going to cover that today because it's specifically to do with services. The union scheme is the second scheme, which covers goods and services, so distance sales of goods and services. And then the import scheme, which is goods only and is only eligible. Well, we'll come on to the import scheme, but that's the scheme I think of most interest at the moment to a lot of GB businesses. So the EU VAT package, 1st of July 2021 implementation date. The principal change will be that all B2C supplies of goods to customers in the EU will be taxed at their destination. Distance sales thresholds, current thresholds of either 35,000 or 70,000 euros are being abolished. Multiple VAT registrations will no longer be required if you're an EU business selling online. You can be registered in one member state and account for VAT on a single EU VAT return, and therefore multiple VAT registrations will no longer be required if you're an EU established business. there'll be a threshold of €10,000 for B2C services and goods. And the €22 goods exemption for low value consignments of goods will disappear. So that euro exemption that's there at the moment, if you're sending goods to the EU from a third country like Great Britain, will be removed. So the union scheme, first of all, which will be open to, it'll be open to GB businesses, provided they've got an establishment or fixed establishment in the EU, but also if they're not. But we'll come on to that point. It's a little bit complicated, but the union scheme has been introduced because EU distance selling thresholds are being withdrawn. Single VAT return will replace the current system for filing separate VAT return. There'll be a single one-stop shop return in addition to the business's domestic return, and the seller will then remit VAT due to their home VAT authority. So a significant reduction in cross-border compliance. If you're a French business at the moment, French online business, you've got VAT registrations across the EU for distant sales. From the 1st of July, this scheme is going to be a major advantage. You're going to have your single VAT registration in France, and all your other VAT registrations can disappear. So, you know, getting rid of a lot of friction, compliance within the EU single market. But for GB businesses, we're obviously sitting outside the EU now, and it's going to be challenging for GB businesses to get the benefit of the union scheme unless they have a stock of goods or a warehouse or an establishment with all, you know, within the EU. So a lot of businesses are looking at that now. Some had already done it in preparation for Brexit, already set up an EU hub. Some are looking at it now in order to take advantage of the union scheme. So non-EU established sellers, so a GB business that hasn't got any stock in the EU, hasn't got a warehouse in the EU, can they register for the union scheme? Well, they can, but where a supplier has no establishment or fixed establishment in the EU and they wish to register for the union scheme in respect of goods, they must register in the EU member state where the dispatch or transport of the goods begins. Where the transport of the goods begins, or dispatch or transport of the goods begins. So that means where the goods start their transport within the EU. So if you're a GB online seller in GB and the stock's in the GB, the beginning of that transport starts in GB and not the EU. So it's going to make it practically difficult for GB sellers to use the union scheme without a hub, an establishment within the EU. So the import one-stop shop is the EU's new special scheme for imports. So distant sales effectively of goods imported from outside of the EU. €22 low value consignment threshold will go. This means VAT will be due on all goods imported into the EU regardless of their value from 1st of July. There's a consignment limit, a consignment value of €150. So only consignments of an intrinsic value of €150 can be used in relation to this scheme, which will still be, that €150 limit is in line with the customs duty exemption limit, which will still be in place after the 1st of July. One of the issues at the moment with the scheme is that non-EU established suppliers, such as those in GB, may be required to appoint an EU intermediary. And this is hot off the press, which came as a bit of a surprise, to be honest. We looked at a business trying to register for this in the register for the import scheme in the Netherlands this week. And we tried to get our RSM Netherlands firm to register them and act as their intermediary. And they've said they don't think they're going to be able to because they'll be jointly and severally liable for the tax, which, it's akin almost to being a fiscal representative. So our Dutch member firm won't be able to do it because this particular client was an audit client. So that's the first sort of wrinkle thing to think about if you're interested in registering for the import scheme from 1st of July. So just in summary, the benefit of the import one-stop shop, the import scheme: single VAT registration in a member. If you've not got an establishment, not got a fixed establishment, got nothing in the EU at all, then you pretty much, I think choose your member state, although it will typically be where the goods are imported into in the first instance. You'll get a single VAT IOSS number. You'll charge EU VAT to your customer at the appropriate rate. Obviously, every EU member state has got a different rate of that. And then critically, IOS import, the import scheme goods are exempt from import VAT up to €150. That's the big carrot that EU are dangling if you register for this scheme. There will be no import VAT on goods, just selling VAT, sales VAT, output VAT, effectively on the sale. The seller will declare and pay VAT in the member state of registration. So, for instance, if you registered for the IOSS in the Netherlands, you would pay all the VAT collected on your sales to EU customers across the EU on the one Dutch VAT return. As I mentioned earlier, a consignment must not exceed €150. So benefits of this. So what the EU is saying is that customs clearance will take place typically in a single EU member state. So if your fast parcel carrier clears the goods in Netherlands, then faster release of the goods and customs delivery times for IOSS import one-stop shop goods. We've got an IOSS number. There'll be more transparency for customers, say the EU. Price certainty, they'll know exactly the amount of VAT they'll be paying. And there will be a single monthly return. And what they say, the EU says, this will simplify logistics and reduce compliance costs for businesses, and result in a better experience for the end customer as well. So, sorry, I just seem to have gone on a bit quickly there. So online, just quickly, was conscious of time, online marketplaces. One of the other impacts of the EU VAT package from 1st of July will be that goods sold via marketplaces, online marketplaces, from the 1st of July, the online marketplace will be deemed to be the seller of the goods, which is going to be quite a change, I think, if you're a business that sells a lot via Amazon. And we'll just go into quickly why that is now. So I think via Amazon at the moment, typically two different arrangements: vendor central and seller central. Under vendor central arrangements since the 1st of January, GB Business sells to Amazon direct. The product is being sold by Amazon to the end customer, which means Amazon accounts for VAT on the sale to the end customer, regardless of where the customer is located in the EU. Big issue is that since the 1st of January, Amazon's required GB sellers using the vendor central model to register for VAT in the EU member state of where the goods are imported to. In other words, Amazon aren't going to deal with the import customs clearance. You need to register for VAT there and then make a domestic sale to them, in-country sale to Amazon. They will then take care of it, everything else after that, but it's still additional compliance. Seller central arrangements, also known as fulfilled by Amazon. A sort of a missive went round to FBA sellers from Amazon late last summer, saying that GB businesses wishing to use Amazon's FBA service we're going to be required to hold inventory in the EU. So they'd have to effectively split inventory between the UK and the EU. And, VAT and customs duty is the reason for that. GB sellers holding stock in EU fulfillment houses, many of them have been required to register for VAT, and that will be the case in respect of the EU VAT package as well, because from July, in respect of all scenarios, where a GB seller is selling goods through Amazon, the marketplace, Amazon or eBay or whoever it is, will be deemed to be the seller of the goods. They will be responsible for the VAT, which is likely to mean that GB sellers holding stock at EU fulfillment centres within the EU are going to have to register for VAT to reclaim import VAT to avoid that unnecessary cost. And the import one-stop shop will not apply, as stock will be being held within the EU at the point of sale, so the import scheme won't apply in relation to those sales. So in summary, we had a lot of change on the 1st of January. There is more change ahead from the 1st of July. And which scheme to register for will depend on numerous scenarios, whether you're supplying goods or services, what the member state of importation is, whether the member state of importation is the same as where the consumer is located, who acts as the importer of record, whether the value of goods is below or above 150 euros, whether a seller registered for the import one-stop shop or not, and whether an online marketplace such as Amazon has facilitated the sale. There's going to be a whole host of scenarios. And what you need to do as a business is work through actually how are you intending to sell goods to the EU from 1st of July? Are all your sales going to be under 150 or above or both? How are you going to do that? And work with your advisor, work through the different scenarios and make sure that you're ready for the 1st of July so that we don't have a repeat of 1st of January. A whole raft more of bad headlines about how online businesses are suffering double import VAT or being penalised for not being registered. Or I think there is time now. Now is the time to be preparing for these changes. And similarly, if you only sell via Amazon, I know that Amazon are pretty good at informing the sellers of forthcoming changes. And will offer their assistance in respect of registrations, etc., for a fee, of course. But their charges may well be changing for various things come 1st of July. So it'd be important as quickly as possible to understand if you are a seller on Amazon to customers in the EU, what you need to do to be ready from 1st of July. So is the EU VAT package good news for GB e-retailers? I think there's going to be some disruption because inevitably some of the parcel carriers and a number of businesses won't be ready for it. And there is additional complexity. I mean, it is not, I read through the guidance, must have been the third or EU's guidance for the 3rd or 4th time yesterday to prepare for this. And it is extraordinarily complicated. And particularly if you're a business that supplies both goods and services. I mean, you can actually, as a GB business, register for all 3 schemes that I talked about earlier. You can be registered for all of them. So it's complicated, and you need to work through what it is you're going to do and what is the best way for you to sell into the EU. And that answer will be different for lots and lots of businesses because it will depend on your own profile, where you're going to import goods, how you're going to import them, whether you're registered, what the average consignment value is. It will look different for every business. So although the e-commerce VAT package is designed to serve as a simplification, the rules are complicated. I've got some slides here about how businesses should be preparing for the changes. I've really kind of just covered that in what I've said. Obviously, technology might be an important piece of this. Obviously, compliance, whether to register for VAT in the EU or not. Businesses need to be thinking about these issues now, because the 1st of July isn't that far away at all. Just a quick slide there on how RSM can help. I'm just conscious of time. I think we've gone over the allocated 45 minutes. So I am happy to take any questions now. I've seen that a couple have come through on the text already, Raj. Am I all right to just go ahead and
go ahead
and answer
yeah.
those? Questions come in saying, are all sales to the EU now VAT free as an export, so only VAT paid is in the country they are going? So the answer to that is yes, so that it's not UK VAT or GB VAT that's the issue. So goods transport, goods exported from the GB into the EU are a zero rated export, so there's no VAT. The issue is import VAT when the goods cross the GB EU border, and the rate of import VAT will depend upon which country the goods are imported into. So yes, the answer is the only VAT paid is in the country they are going to. That's right. Yeah, as far as the EU is concerned. The killer question has been asked by Pete Chapman, IOSS. What about goods over 150 euros? And it's a very good question. And the answer to it depends on whether the customer is in the same member state that the goods are imported into. There are two different scenarios. So if the customer is in the same EU member state as the import, so goods imported into the Netherlands, custom in the Netherlands, then I think a GB business can operate pretty much as they are now. They can send the goods in DDP, name the importer, and pay the import VAT on the customer's behalf. So pretty much as a lot of GB on retailers are operating now. The difficulty comes is where the member state of import of the goods is different to the member state where the consumer is located. So in that scenario, there's import VAT when the goods enter the EU, and then there is a supply in the member state where the customer is located, which requires the seller to register for VAT. So I think in that scenario, if the two member states are different, then where the supply is over 150 euros, the seller is going to have a local VAT registration. And that isn't so different from what the UK is now doing, since the 1st of January implemented for EU sellers into the UK. We are now requiring EU sellers to register for VAT from day one. That is what is going to happen for supplies over that 150 euro threshold. I think what it's going to end up is suppliers having to have a local VAT registration again. That's kind of where I think we're going to, as I say, the rules are complicated. And I would encourage you to sit down with advisors and work through the rules and understand what your business profile looks like and what's the best way for you to manage your sales into the EU. Particularly, if it's a material number for your business, then you need to get this right and ready for the 1st of July. Question from Paul Wright: for Union one-stop shop to a GB e-commerce seller, you need to have a presence in the EU, e.g. a warehouse. If you hold stock, however, then isn't it the case that you have to register for and remit VAT in the member state in which your stock is located, and that OSS doesn't apply. So yeah, so I think what you end up with is 2 VAT registrations. So you have say if you chose the Netherlands, and that was because your warehouse was there, you obviously import your stock into the Netherlands. You might import it from GB or from the Far East or wherever. So you'll have a local VAT registration in the Netherlands, and you'll have to account for VAT on that registration on sales to customers in the Netherlands. And you'd use that registration to recover your import VAT. But then you could also have a separate union stop shop registration in the Netherlands, because that's where the transport of the goods for your distant sales start. So a single registration, and use that registration, the union registration, to make supplies, distant sales to customers throughout the EU. So that's how that would work. Question from Mike Bailey. I'm launching an e-commerce website this summer, importing from EU suppliers. Importing from EU suppliers, drop shipping to end customers in the UK. So yeah, I mean, obviously the UK introduced a lot of new rules from 1st of January, which made it in most cases compulsory for EU suppliers to become registered for VAT in Great Britain, where before the 31st of December they weren't. It resulted in a lot of EU suppliers' parcels getting caught up in the UK's parcel network if they weren't registered. So yes, I mean, it might well be that either you or your supplier, well, you will certainly need a VAT registration. Your suppliers may need a VAT registration depending on their Incoterms of you. If they're selling to you, so a business-to-business supply first, then you can structure the sales so that they don't need to be registered, and then you just make a UK sale. So it depends on the contractual arrangements with your EU suppliers. But drop shipping at the moment, direct from EU suppliers, does tend to mean the EU supplier needs to register for that. So if exporting directly from the UK to a customer in the EU over €150, they can't use the import one-stop shop. That's right. So the one-stop shop, one of the rules is that it's only for consignments of goods, €150 or less. The import one-stop shop, or the import scheme, can't be used for consignments over €150. Nor VAT rules from 1st of July will apply to those sales over €150. They can't be accounted for under the import one-stop shop. May require local VAT registrations, as I explained earlier. I think I've done them all, Raj.
I think you have, Peter. That was absolutely fantastic. Thank you so much for obviously just going into some of the real world challenges that businesses are facing right now. And I certainly learned a lot across that. We've got, I was going to say, we're due to finish up shortly, but I've seen a couple of people have posted questions in the chat function as well. I mean, I'm happy to pick these up if you can't see those, Peter.
Is that in the question and answer or the chat?
If you click
right,
on the chat
right,
box
sorry, yeah,
next to it,
sorry.
yeah.
So yeah, so it's the €150 limit just for the import scheme. Yes. Can you comment on whether there are any changes for selling services to EU, buying services from the EU? There are, yes. There are changes to services as well. So the existing the mini one-stop shop, which is called at the moment, for services, is being, so that the current one-stop shops is for supplies of telecommunications, broadcasting, electronic services. They're the services that have been covered since 2015. From the 1st of July, that scheme will extend to not all services. I'm just trying to just find the list of services that they will cover, which I shall find for you now. They will cover B2C services fall within the following categories. Just find them for you now. It's typical, isn't it? I get a question on services. I'm talking about goods. The types of services will be things like accommodation services carried out by non-established taxable persons, admission to cultural, artistic, sporting, scientific, educational, entertainment or similar events such as fair and exhibitions, transport services, these are all B2C, by the way, they're B2C supplies. Services of valuation and work on land and property, or movable land and property, sorry. Services connected to a movable property, ancillary transport activity such as loading, unloading, hand or similar activities, hire of means of transport, and restaurant and catering services for consumption on board ships, aircraft or trains. So quite a narrow list of services, but it's B2C, not B2B. They're B2C services. So if you think you're impacted by those, then again, you should be sitting down with your accountant or advisor and understanding how you register from 1st of July. So just going down the list at the moment, we do fulfillment for other companies as well as being a retailer ourselves. If we were picking and packing for another GB retailer, would we pass their VAT IOSS number to the carrier to be used for an EU customer receiving it, rather than our own VAT IOSS? And that's a good question. I think I think the IOSS number, the ISS registration needs to cover the supplier of the goods, so that the whoever's importing the goods into the EU and is responsible for accounting for the VAT on the sale of those goods, it's their IOSS number, their import scheme number, that will need to be quoted on any carrier documentation. B2B supplies, no change. B2B supplies, it's pretty much as you are for B2B supplies of goods. B2B professional services, similarly, they aren't going to, well, provided the services don't relate to land and property and are B2C, then actually I don't think there's going to be much change as a result of the EU VAT package. Will the slides be made available to remind us afterwards of what we've just heard? Yes, they will.
Brilliant. Peter, thank you so much for that. Really fantastic presentation, very informative. Again, as Peter said, we're more than happy to share the content. In case you've got any follow-up questions, obviously feel free to get in touch with ourselves and we can pose any additional questions to Peter as and when. One thing from our perspective is after these events, we sent out a survey to everyone who attended, just so we can get some feedback on the event, but also thinking about how we can shape our Brexit activity moving forward so we can offer even more support to businesses across the region. So my colleague Grace will share that with yourselves later on this afternoon. As discussed, we will be able to share the slides as well. And of course, if you've got any particular questions, feel free to get in touch with myself. Other than that, all that's left for me to say is, Peter, thank you so much for that. Thank you for the presentation and going through some pretty technical stuff and raising some of the practical issues which have arisen since the turn of the year. And thank you to all of you for joining us as well. Again, we will be hosting a number of these webinars moving forward. Full details which you'll see on the survey being distributed later on, but also you can find more information on our website. But thank you very much, everyone. Have a great day and we'll see you soon. Thank you.
Bye, everybody. Thank you. Bye.